Housing affordability is a massive issue right now. It's fair to say that over the past 6 months, the country has actually entered into a deep rental crisis. Rental vacancy rates are running at 1%, and rents have lifted for a number of cities by about 12%, in some cities by up to 15% over the past 12 months. We have a real issue on our hands, the biggest issue I've seen in the housing market since I commenced my career back in 2000.
You've got some data coming out tomorrow looking at rental prices and where that side of the market is moving. What is it telling you?
For the month of March, rental vacancy rates fell again, and this is about the 7th to 8th month in a row where rental vacancy rates have declined around the country. We'll be recording a rental vacancy rate of just 1%, with a number of cities recording rental vacancy rates below 1%. That means for those cities, the reality on the ground will be that many families, many young people will not be able to find the home that they actually require. So it's becoming quite the issue out there at this point. It's been driven by a number of factors. No doubt there's been a significant change in housing formation as a result of COVID, meaning that many people have been looking to buy bigger or rent bigger homes. And homes where there's less people in them, and that's absorbed a lot of the surplus stock that we had prior to COVID. At this point in time, though, there's a dearth of rental listings right now, right across the country. It doesn't matter whether you're in regional Australia or in our largest capital city. There's a real rental crisis going on.
Rent, of course, is just one side of the market, property ownership the other, and on Friday the Reserve Bank said that there's some risk with the increase in the number of high debt to income loans that are out there. Are you seeing anything from either major party that is providing some solutions to people who are renting or trying to purchase?
Oh, that's a good question. I must say, when you look at all the various policies that are out there from either of the major parties or indeed the minor parties, there's just a dearth of policy at the moment. There's nothing specifically focusing on housing, or if there is policy out there, it could actually be very counterproductive. So we definitely need to see more detailed policy come out from the major parties. And right now we need an immediate solution, whether that be a ramp up in rental relief in the various states and territories, more rebates on offered. We need something right now for this current rental crisis, that's for sure.
A couple of years ago, banks were assessing applicants' ability to repay their loan on a percentage as high as 7%. That buffer has shrunk. As we move into a phase where rates will start increasing again, how dangerous is it to have that far reduced buffer?
The buffer now would stand at basically 3% over and above the average lending rate. So in other words, the banks at this point in time are assuming that you can handle an average lending rate of 6%. Now that has actually gone up in the last 6 months from about 5.5%, but before it was actually at 7%. So yes, there has been a loosening on that front. 6%, I think a number of borrowers right now, the most borrowers right now would be able to handle an interest rate rise of, say, 25 basis points or 50 basis points. But if we were to see interest rates rise by, say, 2 or 3%, that's probably the point where we would start to see defaults occur in the housing market and more forced sales activity.
Money markets are pricing in up to 7 rate rises this year. That's potentially one every month if the RBA does indeed start lifting in June. We've talked obviously of how you're describing the current environment in the property as a crisis. What would that mean if we started to see very fast rate increases?
If we were to see very fast rate increases, you certainly would see a lot less buyers in the housing market. So you would see more forced sales activity and therefore prices would start to come down. The Reserve Bank of Australia has flagged that potentially you could see a 15% correction in the housing market if we were to see interest rates rise by 2% or 200 basis points. That is certainly possible, but there's a number of other factors out there which may well mean that the market might not correct by that much. So, for example, what is employment actually doing? What is inflation doing? Importantly, we know that there's actually a positive relationship between inflation and housing prices all the way back to the 1970s. So there's a number of factors there, but no doubt if we were to see an aggressive and rapid rate increase, you would definitely see less buyers in the marketplace and you would see more forced sellers.